Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 23rd of September here in 2021. We got ourselves a buy the pullback, which is just a continuation of the uptrend in motion. Thought that could have fallen apart. Thought that could have been the one. Thought that could have been the breakdown. So that was the any type of downside play. But once again, any of these prior pullbacks could have been the one. The last time we really got this deep under those support levels was earlier in March in 2021, and that led to, it was really similar to this, earlier into February and March, we had that pullback, but then the next few sessions were once again a little volatile, but still strong to the upside as the uptrend continued. And again, markets don't go straight up or straight down. They tend to wave, wiggle, squiggle, which means higher highs, higher lows, higher highs, higher lows, higher highs. And that's just what defines a trend, is not one-sided action. It's not straight up, not like that. But it's what we call wiggles and squiggles. And that deep pullback did not result in anything more than a steep support bounce off of 4,300. And we are post the Fed, or after the Fed meeting on Wednesday. Now that's the S&P. In the Nasdaq, we are pushing back to the highs, or at least to the midpoint of that range. And the Dow is where it gets interesting. The S&P and the Nasdaq are still trend up. But as we've seen, the Russell is just playing within a broader sideways trading range. So that was a fade or a long buy signal, not for any trend pullbacks and no dip buying, just buying a support level. Similar to the other turnabouts or bounce spots, again, nothing out of the ordinary. No conspiracies, just playing a range, and the trading range is roughly 2,300, just about 2,350. That's the upper bound. And shorting or fading, fade just means to go short the highs. Fade also means to go long the lows. And that's a contrarian or range type of strategy. This one is just another of those. Again, a dip is a pullback in a trend. These are dips. These aren't dips. These are sideways box buys. And that is in the Russell, the IWM. Again, don't look at those. Just look at the support levels. But it's also playing out in the Dow Mini Futures. And if we want to just get this clean to a basic chart, that's the support levels that we have. And the Dow is turning more into a sideways trading range, just like the Russell. And that Russell is small cap. Now the Nasdaq and the S&P, everything else off the chart, is having continuity of trend as opposed to reversal. We are still closely watching. There are no predictions here. There are no foreknowledge or foresight. We're playing step by step, day by day, week by week, and swing by swing. And that's where the market is doing as well. So any trap shorts help push the market up on the plate of the upside. Outside the equity market, we have crude oil, which is, again, similarly a little more volatile, but playing back to the upside. This uptrend has not quite been broken. Gold continues to play in a downtrend. And I think that gold has a little more chop or volatility. It's not quite as clean or clear. You can't really call this sideways. Definitely can't call it an uptrend. It's more of a declining sideways trend that, if anything, has a little more downside action than not. And the bond market was, of course, where the action was today. We'll start with the daily chart. We're stabilizing into a range. And again, that may be the general theme as opposed to trend. It's just range, box, or rectangle. Lows would be up to the 146 in the TLT and just above 151 or 152. And that's, again, the trading range for the bond market. The big move was on the intraday chart, and this is volume profile type logic, but on the intraday chart, this is the bond market TLT, which began with a gap to the downside and accelerated on high volume. This is, of course, the tradable TLT. The same type logic occurred even overnight, or yesterday's session after the Fed. The Fed meeting was right here, 11 o'clock, and the bond market, ZN, Treasuries, began to trade lower. And that trend continued, or the sustained directional movement continued into today's session, and really all through today's session. While at the same time, that directional movement, if you think about it a different way, the S&P traded all the way up, trend up. The bond market traded trend down. That's expected. That's logical. Doesn't always happen that way, but money flowed out of the safety of treasuries just in today's session and flowed into the equity market. And that chased performance, money chased performance. The market got heated and squeezed to the upside today. And some of the leading candidates in the S&P 100 included Salesforce.com, Schlumberger, which was a relentless trend, General Electric, and some financial companies, which include Capital One Financial, Citigroup, Bank of America, American Express, and of course we have a couple of energy stocks, which include ExxonMobil. And these were some of the leaders in today's session. The broad-based leader of today was not the financials, but we'll highlight it because it's a larger market cap than the leader, which is XLE Energy. And again, that is just relentless. And that's to an extent on the trend of crude oil, which also had a bullish bounce in today's session. So all these things are tying together. Equity market is rallying, the bond market has fallen, at least in today's session. Again, crude is bullish, and leading stocks will be to the financial sector. On our Market Watch tab, we can drill a little bit closer into today's performance. The weakest was utilities. Think of that almost like a bond market in the stock market. So that's safety of utilities. They tend to have high yields or high dividends and tend to be safe. They tend to function like a bond would, but they're still equity companies. So that fact that this is weak shows that the overall strength remains in the risk on or buying side of the market. There are utilities, and beyond that, financials are right here. Our technology names, including the monsters of tech, Microsoft, Apple, Google, Facebook, to an extent Amazon, Tesla, but also Nvidia. And some other financial companies have sway as well. In the S&P 500, in the 100, we see the pronounced effect of these big names. And in the Nasdaq, that was a little bit weaker, and that was in part because Treasury yields were strong today. And there is the yield on the TNX. We discussed that in Tuesday video, the update for Tuesday. We saw treasuries and yields on the chart planning ahead of the Fed. Well, treasury yields went up. Treasury yields pushed higher and made not a new yearly high, clearly, but a new swing high and a level not seen since early July. And that's in the treasury yield side of the market. And beyond equities, or into a little deeper into the sectors and performance, we have not had a lot of stocks, actually very few of them, some days not any of them, made new 52-week highs. Today that has shifted in a big way. Again, you can see the leaders in the S&P 100 and some of the big market cap names are some of the ones that we can look at. We can sort these, and here's how to do that. Just as a quick note, this is our scan tool. This is, to me, it's going to be load scan query, and it's actually going to be public new yearly highs. And these are the names. You can sort them different ways, but I just highlight how I like to put it to a market cap watch. And there's the market cap, and we'll sort by that. We'll actually pull that forward and sort by market cap. So into a separate screen, all we're going to do is look at a couple of the top market cap names, starting, which a stock we just saw, which is right here, CRM. That is Salesforce.com. And I'll push actually on the weekly chart here, just showing the trend continuity. It's a strong stock getting stronger, and that pullback, similar to the equity market, just careful on the thought process, could have been the reversal, but instead it was a support bounce, and that did lead to new highs. Beyond that was Thermo Fisher, TMO, similar type weekly chart trend, very, very strong on the daily chart, and that just got extended, squeezed the last few sessions. In fact, TMO has been making new 52-week highs just about each of these sessions. Texas Instruments comes up next, not the strongest trend, but nonetheless a new high for TXN. And then we have ConocoPhillips. We saw that from ExxonMobil, ConocoPhillips over here, which is there, and just played up to new highs. And that's not really a strong weekly chart trend. That's more sideways, not necessarily a good bullish candidate, but nonetheless, that's what the scan is pulling up. And a stock that we call the overpriced burrito, which is just shy of that $2,000 per share. Who knew a retail restaurant name like Chipotle could be this expensive? And that does have the affectionate name, expensive burrito. Not too long ago, that was just under the $1,500 per share. Now it's just shy of 2,000. Now that is a weekly chart for the record book. That is a quite stellar movement in a stock that would not seem to be on most people's radar as a very, very strong performance stock. We might think Tesla, might think Apple, Amazon. Popular technology names would be strong, but it does not always have to be the obvious name. Sometimes the little hidden stocks can sneak up, and that's probably too high to trade. So that's just noting where the levels and spots are. AutoZone and plenty of others would come into the motion. On the flip side, there are a few stocks that made new lows. Biggest one, we highlighted this on Tuesday's video with earnings coming up, and it was FedEx. So FedEx has actually been in a downtrend on the daily chart since May. Lower low, lower high, break the averages, and they all turn bearish. And the last update was over here. And my thought process is that which is weak tends to get weaker. That which is strong tends to get stronger. And FedEx has made not only a new 2021 low, but we're seeing levels not seen since the latter part of 2020. And we can look at a few other stocks. Insight, INCY. That was another candidate. That's the short side. And we have Lamb Weston Holdings, LW. Just naming stocks that are making new lows to counteract today's bullishness. And then Hormel Foods, which was in Tuesday's video, that extended and made new lows. As we pull into the end of the week, Friday's coming up, the Fed's behind us. We have earnings coming up for a few key names. But right now, just continue watching this pullback and the recovery and how it looked very precarious to the downside. But so did these other moments. And the end result, if past is prologue, the next phase is a very, very quick support relief bounce, and it could be violent. So please be hedged, be careful, be safe, short-term, intraday, and beyond. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for September 23rd, 2021.